Hello and welcome to the Trading Zone. I'm Joe Teague of Equity Armor Investments. With me is Brian. Brian, how you doing?
Great, Joe. Yeah, here we are trading Monday. As always, or at least it seemed the last couple of Mondays, very volatile opening sessions to the last few Mondays. So this is something we're going to actually, we have a few live trades here today to go along with it for people because the market's been moving so much. We think it's probably prudent to sort of get into some of these charts during the middle of the trading day here, let you know what's going on. Also keep in mind as we kind of start this live show, let people sort of trickle in. We want you to ask questions. Feel free to ask us something, a chart you want us to bring up or talk about. We obviously have a good show today. We're talking about the S&P 500. We're talking about VIX and volatility. That's really our specialty. As former traders on the floor, both Joe and I, coming from the SIBO, we were market makers in VIX options and developed algorithms to trade VIX futures and volatility in the marketplace. Option trading, really our specialty. So we talk a lot about that on the show. Really the big story, a couple items, Costco, Broadcom earnings this week. So we're going to get into those. And then if you've tuned into our newsletter every week, our trade of the week is going to be on Caterpillar. And those that are subscribing to our subscription agreement with our weekly trades that we continually update and get sent straight to your email have already received this Caterpillar trade. But we're going to talk about it, dissect it, just so everybody else can sort of understand where we're thinking and coming from on a trade in Caterpillar, because obviously a lot going on here worldwide, globally, and I think there's some macro plays to be had. But Joe, why don't you get into a few items that we got going on?
Yeah, so again, welcome to the Trading Zone. I'm Joe Teague. I'm trying to get some live charts up for you today. We'll see how that works. We'll get to that in just a minute, but let's round out the week to see what we got going on ahead of this week. Now, no surprise, we're still talking about tariffs. This is 2025. That is what we're talking about, right, Brian? We're talking about tariffs. We're talking about global conflicts around the world, of course. So we were seeing a new potential round of tariffs coming on soon. Maybe some still going on with China, of course, a back and forth with China. We'll get into that. And of course, maybe potentially more with Canada. This is crucial. Could lead to higher prices in the short term, or a one-time increase in prices. So we have to be wary of that and the potential jolt it has to the economy.
Yeah, tariffs, obviously, anytime the word Trump tariff seems to pop up in the news wire, it seems to have a negative effect. And, we know these tariffs are supposed to go into effect this week. So this is obviously going to make for some probably volatile trading sessions, whether these tariffs are going to stick, whether they're not. Somebody's going to cut a deal last minute. So this again makes for volatile openings in the market. And anytime we sort of see those two words, Trump and tariffs, it moves the markets.
Also going on around the world, we're talking about China. So they're going to deal with these tariffs, Brian. They're going to be adding to their budget. They're going to be stimulating their economy, trying to get ahead of these tariffs. And they're just saying, hey, they're out there. We want to have growth. We need growth for our stability in our country. So they have a target of 5% growth. They're going to boost up their spending. They're going to try to get that. So that should be just globally stimulative to everything else going on. It's kind of like a push and pull. Everything has a side effect and a ripple here, Brian.
Well, assuming the stimulus can really actually have an effect and they start to actually do things internally rather than just relying on manufacturing and producing for the rest of the world, because that seems to be a diminishing return for them. So they can spend towards that. But obviously, listen, here we mentioned the word tariffs, and a lot of people, including Warren Buffett over the weekend, said tariffs have some sort of inflationary effect, right? But what could happen on the deflationary side, inflation doesn't need to come to the United States or the end purchaser. What you could get is sort of deflationary pricing, where other countries have to change the valuation of their currency, print extra money, lower the sort of cost for people to want to use their goods and services. So even if there is a tariff there, the price of their import side has gone down. So it can actually have an opposite deflationary effect in some degrees. And, if China is going to stimulate, and that's going to be their way to get out of this, or at least have a negative or have an opposite effect of what's supposed to happen, where people are buying less from China, then certainly that could be sort of an interesting play.
Yeah, I mean that's certainly possible for countries that are not pegged to the dollar, but for China, who it's pegged to the dollar, it's a lot. It's a lot more challenging. But they can get creative and they can dial down their currency, dial it back up as they wish, as they've been known to do. Then of course this event happened on Friday. We had that infamous now meeting in the White House. I don't know, Brian. What was your take on this, and how is it going to affect the markets?
Look, it's interesting here, and I've had discussions with people about this whole situation with Ukraine and Russia, and the fact of the matter is, Ukraine has wanted to join NATO. They haven't. It's been 30 plus years where we could have figured out a way to have Ukraine join NATO, and that hasn't happened. So I don't think like the hardcore coding of NATO's in the articles of agreements is going to happen. Otherwise, it would have. So now, how do you sort of dance around that and play and help sort of defend that area? Well, the problem is you still have both enemies are sitting there at the border with each other, and frankly, pissed off, right? So, Trump is just trying to find a way where we can sort of.
A little worse than pissed off at each other.
Yeah,
they're killing each other.
Yeah. Right. Exactly. It's not a good situation, right? So, Trump's just trying to dial down. I mean, I think they've said by having some sort of mineral rights there, now you've got U.S. people in the country. Obviously, the United States is going to want to protect those people. So it's kind of a synthetic way of getting NATO to Ukraine without actually giving them the full signed, sealed, delivered way of doing it. Great Britain has been in the news saying they're going to send troops there now, potentially, and air support. So I think we're kind of getting to a point where it's maybe the end is near, at least in terms of war, and things start to settle down, and differences don't really get put aside, but there's at least some peacetime here, and that's probably a bullish thing for the market because this war has had a lot of inflationary pressures and lives that are being lost, and hopefully that sort of back and forth can kind of come to an end.
Yeah, I think all that. I have to agree with all that. I think Russia wants Zelensky out. Zelensky's trying to stay in. However, he said, if you put me in NATO, I'd happily leave. He doesn't need to stay, is what he said. He's just going to fight, but he's going to fight and defend his country is what his point is. I think kind of just him leaving without any security guarantee, I think that is a win for Russia, and he doesn't want to necessarily just hand Russia a win. Russia wants Ukraine like as part of their sphere of influence. Europe wants Ukraine as part of their sphere of influence. They want Ukraine in the EU. They want access to the natural gas and all their resources too. So it is kind of just a really fascinating game. And in the meantime, just people are dying. I think I'd love to see this conflict end. I'd love to see it be good for the economy, lower prices, but also just a rebuilding, another area where, infrastructure will be rebuilt and all that will just be stimulative to everything else we got going on. So I'd love to see that happen as soon as possible. But yeah, Europe saying they're going to step up, they're going to increase their spending. They might just be, nervous about what they perceive as U.S. and Russia just collusion or cozying up potentially. So they're very wary of Russia, maybe for good reason. They're just going to say, hey, if the U.S. is going to be the global police, not that the U.S. is supposed to be the global police, but in post World War II environment, that's been the de facto. The U.S. has been, the biggest economy, spending a lot of its resources to defend its allies around the world, which has helped the U.S. Historically, but it's been shifting away from that recently where, we're gaining less by the money we're spending. So it just makes a lot of sense for Europe to step up and say, hey, we're going to do our own defense and counter Russia in our own ways, which of course is just going to boost up more demand for global economic goods. So it's another stimulative effect to the economy.
Yeah. So, I mean, look, a lot of headline news over this last week. You ways to interpret the market. It's why volatility is at a heightened level with the VIX, jumping around.
Not to be like overlooked though. Still you have the war going on in Gaza and Israel. Hamas is not seemingly stepping aside. That's another area where a very large infrastructure planning is going to happen once this war finally ends. So just another area spending a lot of money, a lot of machinery. We're going to get into that if you stick around the end of the show. A lot of machinery is going to go into the rebuilding here. So I think the potential is there. We're close to on a couple of these areas. Just I'd love to see us get over that hump and get to peace in these two key areas.
All right, Joe. So we got a lot of news and information. We got to get in. We got to trade this. Let's get right into the meaty grind of the show, which is called the Trading Zone. I'm Brian Stutland here of Equity Armor Investments, portfolio manager, along with my colleague Joe Tigay. We're here on the Trading Zone, the show sponsored by the MIAX. It's brought to you by the Tradier Hub and the Tradier people. So thank you for having us on here. But we want to get into this. Obviously, a lot of news that we just talked about on the live show stream. Coming in here about ways to sort of interpret what's going on. We gave our sort of a little opinion about it, but we have a big show here today. We're giving a trade at the very end on Caterpillar. And in the middle, we want to talk our big idea here. A couple really big earnings. Costco. One, let's talk about what the consumer is doing because we got a little indication from that from Walmart last week, which wasn't great. And we also have Broadcom coming up here, earnings. What's been going on with the tech sector, because a lot of those stocks have really actually kind of gotten beaten down, as bullish as people are on AI, as we are too. But we're going to talk a little bit about that, how the charts look and whatnot. And so, Joe, what do you got for us on the week ahead here, though?
Yeah, let's take a look at the week ahead, Brian. Of course, you mentioned it. We got the Costco earnings coming up. More AI coming out. We got AVGO, MRVL. Just that data center build out narrative. We're going to get another look at that today. We saw great news really from NVIDIA. I saw last week. The market just said it wasn't really enough. And maybe that makes sense. Maybe the pricing of their of these stocks are just already high. They're just already saying, yeah, I know you're going to blow it out on these earnings. So blowing it out isn't good enough for me anymore. Maybe we just need to consolidate sideways. Again, I thought the numbers were everything that NVIDIA needed to do last week. And the market still didn't like it. You know, and that can happen when you get these PEs in the mid 30s here. So that's what we're watching here. Another chance for AVGO. But Costco, you mentioned it, Brian. That's another area. And just a quick pop quiz for you. What do you think is a higher PE, NVIDIA or Costco?
Well, I assume if you're asking that, it's Costco, but that would be shocking if that's the case.
It is the case, if you can believe it. So, yeah, I know people are excited about Costco. Their financials are just fantastic. Like quarter after quarter, they're able to do it. They're excited about the potential of, you know, going overseas, going into Canada, going around the world. So there still is upside potential there for Costco. It owns the U.S. It is just in the right spot at the right time where you kind of have this like upper middle customer just scooping up these items, and you know, just their inventory shelf life. I love Costco, but again, their price is very high. Maybe we'll see another story like NVIDIA where they have a great earnings, but the stock isn't necessarily rewarded just because the price is very lofty. Of course, beyond that, Brian, we're going to have big economic news behind the earnings. We're going to have the jobs numbers, which are going to be crucial. People are talking about DOGE. People are talking about federal employees losing their jobs. Is that filtering in through the jobs market yet? Is that going to have any spillover effect? I don't think you'd see any spillover yet in February, but you might, see the concern of that down the line.
Yeah, certainly. I think the jobs report will be kind of interesting. Not maybe as quite as important as it had been in the past, because we've seen unemployment rate come down now in that 4 to 4.1%. 4.1 is what they're predicting. So maybe not as important or critical because we're not sort of in this trend of upticking, but something to sort of watch. If it does worsen a little bit, given the lack of consumer spending and reports from what I just said is Walmart being a little bit disappointing. So that sort of would be a little bit of a concern, especially with interest rates now, the 10-year kind of sort of starting to predict maybe some sort of recessionary feel, the fact that those rates have come down quite a bit. So that's something sort of to watch here. And obviously you kind of get a little bit of heightened volatility getting into there because the market does move a little bit off the jobs report.
Yeah, absolutely. And then there's the push and pull. Maybe a weak economic data will mean lower interest rates. Going to have some Fed speak going on this week, including Powell. So we should be watching interest rates. It's been fascinating. Like we've seen, interest rates pull back on the 10-year. in the middle of this like momentum trade pullback too. So it's kind of almost like they're happening at the same time. Like the 10 years really about the future growth, and these momentum names maybe are also about these future growth. So it's fascinating to see how this is playing out. You almost kind of want to see like people just pricing in some growth for the and higher yields to make these names stop. We'll see how that plays though, Brian.
Yeah. I mean, look, there's a lot of fundamentals in the market right now that'll make your head spin, but I think, you bring up this chart here, the skew index, which measures the value of premium of a downside put relative to an upside call in the market. The put is protection for the downside, and it gives you the right to sell no matter how low the market goes in the S&P, and a call gives you the right to buy at that strike price no matter how high it goes. And so the relative weighting of these two premiums is kind of interesting. And I think, look, if it was going to be very bullish out there, I think this skew index would come down. I think we would have seen more call buyers. Now, at the same time, the skew index is not as high as it was a little while ago, but it's making higher lows. So I think the trend is slightly higher still in here. I would want to see this skew index drop kind of dramatically. I know it's a little suppressed relative to, there hasn't really been this panic, and that's the one thing that worries me, that there's going to be this one last sort of panic market shakeout, because we haven't really seen put buyers come in a panic about the downside. And to me, that's a little worrisome. I don't know what you make of this, Joe, but that's kind of how I see it.
It is just a question. Why aren't we at these levels yet?
Yeah.
The first knee-jerk reaction is, well, maybe we are going to get there when the market's a lot lower. So that's certainly possible. But this still could be an area where it decides to turn around and the market goes higher. So this is important. We're going to watch. We're going to see this kind of turn first and give us kind of direction for the VIX. Just want to bring up one more VIX component here, Brian, and then I want to look at some sentiment stuff real quick. Here's the VIX term structure, the VIX futures curves here. So we're in red, very, very in line with where we were a week ago.
Yeah, and you can see here where we are right now relative to where we were a month or 2 months ago. It's definitely higher. Somewhere in the middle of those four curves is probably fair value for volatility. So it's on the high side. It does worry me a little bit that people want to sort of own market movement and buy the VIX, which is basically constructed and calculated off of premium options in the S&P. So the higher the VIX goes, that means people are willing to are at least expecting bigger moves in the market. And the fact that it's trading higher than VIX futures means that, option traders in the S&P are confident that we're going to get some continual market movement going here. So that's a little worrisome for me. But the fact that the VIX futures, maybe they're smarter, maybe they're saying, hey, this volatility pop is going to be short-lived. But I would be waiting, if it's going to be short-lived, I'd be waiting for that skew index really to flip and fall lower to say, okay, yeah, the VIX futures are right that they're trading at a discount. Otherwise, I think it's right on the border whether you can own volatility here or not. Our signal went on for a little bit. We got a little vol pop. We took it off. We're kind of right at the cusp where volatility could go a lot higher, like Joe mentioned on that skew index, where we haven't gotten up to those levels of extreme put buying yet. So there's room for the upside to happen if things go sour.
Yeah, for me, I just think the VIX is just going to kind of live in this area this year, this 16 to 20 area. So right now we're on the higher end of the range. The futures traders might just be saying, hey, the VIX is due for a little bit of pullback before expiration. But this is a seasonally volatile time of the year. Just want to pull up this chart real quick in here, Brian, as I can pull it in here. Sorry. The AA2 Investor Sentiment Survey. This thing is flashing a crazy bearish reading here, 60.6. This is highest since basically 2009. So there is crazy bearish sentiment survey. People are extremely bearish right here. And as the contrarian me is just wants to say, hey, this can't last. This can't stand. This is the market can't go lower when it's that bearish.
Yeah, well, I mean that's a great point, and that's probably why. I mean the rally we saw last week at the end of the week was nasty to the upside. I mean, these rallies to the upside are almost as volatile as they are to the downside these days.
Yeah.
And so we get a couple indications here in, let's say, the skew index. The fact that we have this bearish sentiment could really trigger a nasty rally further higher. So I really think we're going to move off this 6,000 level very soon in the market. I don't think it can stick around here the entire month. Although 6,000 is a big number, it's a way for the markets to pin at something that they feel good about, a good big number like 6,000 in the S&P 500. But I actually think it's going to be the opposite. I think we're going to get a pretty significant move off of this, given the fact that everybody is so bearish and volatility is already a little bit high. So that'll be interesting to watch.
Yeah. So let's see if I can share share some charts here with you, Brian. There we go. So yeah, put up the SPY up. Oh. I put the SPY up here. This is in the TradeHawk trading platform. And yeah, we can kind of zoom in here. This is a one-day chart of the SPY. Obviously had some weakness lately. Still trading, above some key levels. The bull trend is, the long-term bullish trend is intact, but we're definitely seeing some short-term bearishness.
Yeah, but again, the market's sold off pretty hard, right? If we were to draw some sort of trend channel, we're at the lower end of it. Like I talked about, is we could break some levels that are key levels, and then you get a huge volatility pop to cause further selling and panic. But you can see, look at just the size of the candlesticks have been getting larger and larger, right? To me, that means more volatility. It's justified that the VIX is sitting up here near the 20 level.
Yeah, and it's the same as going on in tech. Absolutely massive moves here. Certainly good. Nice that we're holding at this level. Last week we were able to find some support here, but it did make a lower low here. Yeah, it definitely is kind of skittish, these charts, and really the worst for me is almost my most important is the semiconductor chart. Just absolutely making a fresh low here.
Yeah, I mean, go back into like April 2024. It looked like we get this sort of double bottoming position in the semiconductors, and it did try and break out. It failed to break out. Look at that gap down. It fills the gap in recent weeks here, and now making lower lows. So that's a little disappointing for the semiconductors. But this could just be because the semiconductor SMH is full of different types of semiconductors, and to me, this is an indication of real winners and losers. When you look at it, the winners, I'm just looking up at my charts here on the screen, like Intel up 23% year to date. NVIDIA obviously struggling, down 10%. That's, having a drag on the SMH itself. But in recent years, that's been the winner. So I think the concentration among semiconductors is just sort of narrowing, and, it's making it all sort of have a drag on the index, the ones that are going to be the losers in this versus the ones that are going to be the winners. But yeah, we'd like to see the semiconductors typically lead the market charge if we're going to move higher. Yeah,
so maybe looking around at some other sectors, you got the financials here, the XLF, that is telling a different story. That's telling a story, and this is fascinating. You see volatility kind of on the rise, but you're seeing financials on the rise too. So we're not really seeing like the credit risk event out there that we're familiar with, higher volatility. We're not really seeing people slowing down their loan activity or their banking activity. So it's really interesting market we have right here, with the financials doing so well, a lot of the other sectors not doing so great.
Yeah, you're right. It is interesting how strong. I mean, I think the financials have been more of a safe haven kind of trade for whatever reason, in terms of value of people moving away from growth. Obviously, one of the leaders in there, that a stock that we really like, is Berkshire Hathaway. Tremendous year, great earnings that just came out. So we're long that for clients in the portfolio. In fact, it's probably one of our bigger weights in our portfolio. really been a successful stock in kind of encapsulating all large cap value, which has really kind of hung in this year. And that's really been the trade to be in on the year, especially in the last recent couple weeks.
Yeah, and cash is king for Buffett right now. He's got more cash than he ever has. I want to caution people just saying, hey, that's going to be like a sign the market's about to crash out. He was right in 2008. He had a lot of cash on his hand, but he had just as much cash in 2005. So he was kind of just sitting on the sideline for a while waiting. He proved out to be right eventually. We'll see how long that wait turns out to be this time around. I think
people like that he's kind of being cautious, for whatever reason, right? I mean, the stock, one share, $770,000, unbelievable. I mean, if I was trading this, I would probably trade the B shares, not the A shares. If I was a regular investor, unless you want to go all in or have a major part of your holdings, or maybe you're Elon Musk and you buy the A shares because one share doesn't really mean anything to you.
Yeah.
But I think, Joe, we should bring up a chart because I think there's a couple stocks out there that, I really want to get to our big story of the week here, which is two earnings, Costco and Broadcom. So I think we should kind of bring those in, see how those charts look from a technical basis, give some ideas about how the earnings outlook's going to play out for some of these names.
Yeah, just real quick, I want to bring up just some of the momentum names that we had talked about a lot recently, like Palantir. Perfect example of the AI momentum name, just absolutely blew out, just ungodly, unthinkable numbers here, but 125 completely erased its gap all the way back down here. We're back in the high 80s right now, trading right here. So I think it came back to the right spot and it found support there. So I think that was actually, nobody wants to see a 40-point pullback, but actually was it a healthy pullback. If I'm a long-term bull, it doesn't really change my narrative. 125 was probably a little bit of FOMO. Back here is much more reasonable prices, and I'd love to see it consolidate here and kind of build on this. Another stock that looks a lot like that, Brian, is Tesla. Had the FOMO trade after the election, a strong pullback, but again, a really good spot to find that support here, right here at this 270 area.
Yeah, I'm a little worried that maybe it covers a couple of those gaps, a little bit lower there. What is that, around 250 to 240? Just looking down here at the chart, 220 area, maybe even. Obviously kind of had this like triple top, double top formation kind of thing. It retested that. It failed. So there's going to be probably some overhang in this stock. I think people that are going to be willing, that bought in the 300s, that if we gets into the mid 300 range, people are going to probably want to get out. So I think there'll be some headwinds here in the stock. I like it long term still. We continue to hold it for clients. Obviously, we're not obviously, but I don't want to dump this stock given the fact that it just made this huge move down and freak out. But certainly, it's not. I don't know that it's necessarily racing all the way back to all-time highs anytime real soon, to be honest.
Yeah, well, nice turnaround Friday. Love to see it kind of stabilize here, hold here, give it some time, see how it works out. But like you said, let's bring up Broadcom real quick, and then we'll look at Costco.
Yeah, so Broadcom earnings this week. Look, all these tech growth names have really kind of gotten, hit a little bit after earnings, even if they're good, like NVIDIA, like you brought up earlier in the show. I thought the earnings were fantastic, that the stock's been punished pretty hard for it. We were a little bit wrong in our trade where we had a long call. I would consider still holding that long call that we gave before on NVIDIA. But, here's a stock that now it's already it's not trading at its high, right? It's already kind of come off with the rest of the market, which to me means there's maybe some room to the upside. But look at the area right there. 195 is probably an area that is sort of I think we could get a pretty big bump move off of that. What do you think, Joe?
Yeah, I certainly would say so. Looks like this was a really nice cup and handle here that lasted a whole year basically to play out. a fantastic breakout to the upside. It basically fulfilled that entire range. And now I'd really like to see it supported here above this area, above this 185, 190 area. So I think we're pretty close to where support should be. Whether or not it turns out to be, we'll find out after earnings, obviously. So I'd love to see it consolidate here, even if it doesn't go higher. But for the long term, just stability here. Just want to see it stabilize here, find some support here, and then a stronger economy. Or stronger, it's just a stronger sentiment right now. There's so much bearish sentiment. A stronger sentiment will lift all these momentum names, to go along with their earnings.
Yeah, if I owned 100 shares of Broadcom, though, I probably would look at buying a put spread into earnings, maybe something like the 190, 175 area to sort of play the fact that it could continue to cover the gap to the downside, just to give myself a little protection. And then I don't have to dump the stock. I can still hold on to it because I think it trades back to 200, and then all of a sudden, like all these people that got shook out over the last little bit, do some Fibonacci retracement analysis on this, and you're looking at 230 or so to the upside, a 61% retracement from that high to where we are now. So I don't want to just dump this stock and say, oh, the technicals don't look great. Are we at risk of like failing this cup and handle breakout? Yeah, that's a good one to measure up there. Is take a look at that Fibonacci retracement levels and kind of see that I'm talking about that 225 level that we could quickly get back up to. So yeah, I think a put spread kind of makes sense. 190, like I said, 175-ish or so. Cover that 61% retracement on the downside, protect yourself against that is probably how I'd play it.
That makes a lot of sense to me. Let's look at Costco real quick. Man, this chart is just incredible. It's just been a fantastically run company. I love going there.
And it's amazing how much free promotion they get from Big Justice and the YouTuber and his many subscribers on chocolate chip cookies and what they've done there. So on the younger end of things, of kids saying, "Oh, I want to go to Costco too."
Is that the Costco rap kid?
He's kind of like his name is Big Justice. I don't know. He's in South Florida. They go to Costco and
a little chunky.
Yeah. And so, pretty rambunctious kind of kid, but tons of subscribers. It's free promotion for Costco. The rise of his YouTube channel probably correlates to the rise in the stock itself. But yeah, this run's been tremendous. The valuation we mentioned here, saying it's higher than NVIDIA. Look, we own this for clients, but because can the growth story continue? I think so, but there is probably some risk that we've seen with other earnings where even if they hit, they go lower. And what's moving average line did you bring up right there?
Sorry, it's just a 20-day moving average. Let's see if I can make it like just look at. I mean, it's just this is a 50-day moving average. It's just racing. It's extended. There's no question about it.
Yeah, but you can see there, it definitely has moments where if it gets overextended from the 50-day, it challenges it back and fills it before being able to go higher. So if I were like to say, hey, do I need to put new money to work? I'd probably wait to see Costco trade back down to its 50-day moving average and kind of trend and hold steady there before I'd be a buyer of it. Like this is not a stock that you go out and I go ahead and chase that stock, right?
No, I would want to see it pull back a little bit. Glad we own it. But it's hard though. Like we talk about it having such a high valuation, but if you bought it this high valuation years ago, you're thanking yourself that you did. So that's the challenge here. Right now, the reason why it's so tricky for me right now is just right now the sentiment is very weak. A lot of the momentum stocks have been getting hit very hard. So that's where it just makes a lot of sense to be cautious with Costco. Use options when initiating new positions and all that. So Brian, let me pull back up our other chart here so I can get into our trade of the day.
Yeah, our trade of the day, we talked Caterpillar. We sent this out on our newsletter early this morning. Obviously, we kind of believe that the infrastructure play will manifest itself, whether it's between China or Europe, that play will still continue. Caterpillar will still be a leader in terms of global GDP growth. That's where they do their best. When we see GDP growth continue, interest rates, stay relatively contained. And so here's a stock that, we are a real big firm believer, but we're heading in. You look at this chart, the technicals, like so many other names out there right now, that we're not, I think the tone on this show has been that we're not overly saying go put new cash necessarily to work, or if you are, do it in a more cautious way, just to stay invested. Obviously, I wouldn't want to be not in the market, but getting real aggressive, probably not the best situation just yet. And you look at this chart, it's kind of broken through some levels, but the 350 area, what do you make of this, Joe? What do you make of earnings? Is there a trade that you're looking to put on coming up here?
Yeah, so I want to look into March and just kind of looking through here on Caterpillar. I want to make some money if there's some sideways action. Want to sell a little bit of volatility. We have very high volatility here in March, and I think we can use that to our advantage. I also think Caterpillar will be going to the upside in the short term, and the upside in the long term. And there's kind of this little catalyst here. You look on this chart here, Brian. We put up the 200-day moving average.
Yeah.
Even if it is still in the middle of a medium-term downtrend here, I do think that there's a good possibility of it trading back up to that 200-day moving average, right about at 360. So that's kind of how we're designing our trade here. I'm going to sell a 335, 360 strangle, bring in some premium, buy the 350 call here in Caterpillar. That makes a lot of sense to me. With the price target right at this 200-day moving average, we're looking for it to trade back up at that close to that 200-day moving average. And by the way, if it pulls back below 335, we're ready to get long Caterpillar, put some other trades on surrounding that, because we do think Caterpillar looks good for the long term, of course, with everything we mentioned. But in the very short term, just kind of cautious here, but want to be ready for that snapback, that 200-day moving average.
And did you pick these strikes because it gets you to almost a zero cost to put this trade on, or are you looking at some of the technicals on how to play this where this trade will start to pay off, or there's maybe some risk?
Oh, it's funny. It kind of played out both ways. We were looking at the technicals, obviously, on the 200-day moving average. It's kind of our target on the short term to the upside. So we wanted to get that 350, 360 call spread on. And then also just looking to the downside, I wanted to collect on this. I wanted to sell volatility. I wanted to collect on this trade in case we get some sideways action, which I think is also very possible. So yeah, again, let's look at the trade there. So you can sell this strangle, buy the call, collecting money. Right now it's actually around $2 because Caliber is a little bit lower than where it was on the open, Brian. But for me, yeah, this is how it lines up. 335. Again, an area I'd love to be long it, much better than 345, obviously, about 3% lower. So happy to own it 3% lower. And I think for the long term, I'm going to love owning Caterpillar. No one else can make the bulldozers and excavators and all of the incredible machines that they make.
Yeah, I like the trade because it gives some cushion here. Again, our tone on the show has been like, hey, I'm not getting overly bullish just yet, or I'm not putting new cash in an aggressive way to work. So this is a way to sort of soft to do that, right? Because then by selling that 335 put, you don't own Caterpillar until it gets down to that level, which is a few percent lower. And at the same time, when you look at some of the technical, that 350 level, if it can trade and close back above there, I think it has an easy time to get to 360. And this is a short-term trade that can pay off pretty quickly. You can obviously make $10 to the upside. So that's the max gain on this trade. And it's just, I think it's a good probability trade, so to speak.
Well, I would agree there. I think that will do it for us this week, Brian. I think we had a fantastic show, covered a lot of ground. Thanks everyone for tuning in. Remember, we are here every Monday at 10 Eastern, a must watch to preview the week of trading, of course, and especially the week of volatility.
And also, I got to say, we have a new deal on our subscription newsletter trading ideas that we have. If you open up a Tradier account, you would get a credit 4 months free of all 3 of our trading programs that we send out. And you get an email alert straight into your inbox about the trades we are doing, and then you can go ahead and act on that. So if you open up a Tradier account, that allows you to get those 4 months free, which I think is a great deal to sort of try out, see how we do. And it doesn't cost much, and it's you've seen the charts and everything else that they have. They're kind of cool. So go check us out, equityarmorinvestments.com. Sign up for a subscription now, and look for that new offering that we have coming out. It should be out tomorrow. So go ahead and check us out tomorrow and get that deal done. But this is Brian Stutland here of Equity Armor Investments with my colleague Joe Tigay. Tune in every Monday. We'll see you and catch you guys next week with more trading information.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.